All right, so Urbanation just released a report, and their findings on the rental market in the GTA for Q1 were pretty amazing. So the average purpose-built rental unit is now renting across the GTA for $3,000 a month. I repeat, $3,000 a month. That is a new sound barrier threshold that has now been crossed, which is pretty amazing when you think about it. And condominiums not too far behind, slightly over $2,700 a month for the average rental. Now, when you really think about this, that means just to rent the average one bedroom in Toronto, in order to qualify, you're going to need to have an income of over $80,000 per year. As you dig into the report even more, it had some other interesting sub-findings, which were the smallest units showed the greatest amount of appreciation from a rental rate. Studios and one bedrooms up 17%. And even more impressive were the little guys, under 500 square feet, and they were seeing rents rise by 21% from a year ago. And we, for our investors, have always been big fans of the little smaller condos, and they are continuing to outperform from an investment standpoint. Interestingly enough, the report by Urbanation also went on to say that we are now in our fifth quarter of a vacancy rate of less than 2%. So this is really important because basically what it now means is that the Toronto rental market has officially bounced back from COVID, with people moving back to the city in droves. So the question is, what does the future hold for the rental market? And this is really pertinent for renters and for investors or potential investors alike. I'm Ralph Fox, and I'm the co-founder and broker of record for Fox Marin Associates, and we are a boutique residential real estate brokerage that focuses on central and downtown Toronto. While real estate by nature is hyper-local, the purpose of this playlist is to discuss economic and geopolitical events and macro trends that could have a great impact and shape the future of the Toronto real estate market. If you'd like to keep abreast of what might be coming around the corner in Toronto real estate, then please be sure to hit the subscribe button down below. So if we're taking a look at the rental market and the investment landscape in the GTA, we really have to start talking about the number one issue, which is supply. So there's an interesting quote here by the author and president of Urbanation, of the report that just came out, Sean Hillebrand. And what he goes on to state is that the fact that rental construction has dropped by 60% in the last year, despite rents having risen over the $3,000 threshold, is very indicative of the economic challenges that developers are facing. And we're not just seeing this on the rental side, we're also seeing this on the condo side as well. Recently, it just came out that in 2022, 1/3 of all condo pre-construction projects have been canceled over the course of the entire year of 2022. So we're going to see challenges even with high price, condo resale. We're still going to see a lot of challenges with future pipeline coming down the forefront. So the real issue is that we need more supply, and developers are really being crunched by restrictions, by high development charges, by the inability to get approvals quickly and shovels in the ground as fast as we need them to. We're looking anywhere for a 5 to 7 year window, and that is just not quick enough. And when we look at the population increases, I mean, it was all over the news recently, but Canada population increased by 1 million people in 2022, 44% of them actually relocating to Toronto, the GTA area. And so what that really represents is a problem, is a fundamental problem, because while we have all of these people coming to live here, there really is no plan in place for where these people are going to live. I mean, we're already undersupplied very clearly. So Any attempts the government is making really so far to open up supply have just been overtures. And we at Fox Marin, we love immigration. I've seen stats where 80% of all first-generation millionaires are immigrants. When they come to Canada, people want to work, and we need people with a strong work ethic in this country, if one thing's clear. So we're very pro-immigration. The problem is that there really isn't a plan in place with which how we're going to open up supply. Nothing that's effective, for sure. The secondary issue, and it is in conjunction with the issue of supply, is low turnover. And the reason why we're seeing low turnover in the rental market is twofold. Number one, during COVID, as the rental market went down dramatically, we have people that are locked in at these very low rates. And as the rental market, continues to increase in terms of rates, 20% we saw last year, people are really reluctant to move, and understandably. And the other problem that we have is rent control, which has always been the problem and actually is the real cause for the price appreciation, not just in rental, but in condos that we've seen in the GTA over the last 20 years. And that, I could do a whole 2-hour discussion on that, but the problem that we have with rent control is that people are locked into these rental rates. They aren't moving. We have very low turnover in anything that has been built prior to 2018, which is where the rent control threshold takes place. And so we don't have a lot of properties, new condos coming online to fulfill demand, not even close. And with the existing inventory, basically nobody's moving. Everybody's hunkering down. And so that's why we've seen the price increases that we've seen. And I really think that we are inclined to seeing even higher rent controls. And if rent control comes in for anything built after 2018, which might happen if the political winds start to blow in a different direction and the Ontario provincial government gets replaced. And really, I think what they fail to understand, a lot of policymakers who are pro-rent control is that capital will just move elsewhere, and there will be even less investment into rental units and into individuals wanting to become landlords, which is already a challenge given how far over slanted the laws are in favor of tenants versus landlords. And you get to a tipping point where people are like, it's just not worth renting out my basement apartment. I'll keep it empty and I'll take my money and I'll invest it somewhere else. Or why would I buy a rental condominium that won't be built for 4 years if I'm going to be faced with a ton of taxes and a ton of liability with regards to how the rental laws are structured here. And so capital is very fluid and it can move in other directions. And the harder you make it for landlords to want to become landlords or remain as landlords, the harder it will be to increase supply where we need it the most. So, right now, because of the situation regarding supply and low turnover and problems with policy, we're seeing situations like recently we just had a tenured university professor who moved here from the States to Canada, and she was just shocked to find that she can't really provide the income to support her family's lifestyle in transitioning from the U.S. to Canada. And we're seeing that more and more, where a lot of professionals and professional families just aren't able to even qualify, let alone find anything that would work for the circumstances. And so more and more this is becoming a problem. And I think we're going to continue to see increased rental rates and these type of situations becoming even more problematic due to affordability. And that's why, going back to the Urbanation report, we've seen a huge uptick in the smaller units, because that's just all people can afford, and it's putting even further demand on those smaller condominiums. So just to wrap things up, we've crossed that 3,000 threshold barrier on rents, which is extremely relevant because we've just never seen those type of numbers here, and they're starting to look very comparable to cities like New York. I mean, we are starting to creep up there. So rents really where we're at are going to continue to rise. We're going to continue to have supply challenges. And hopefully, in the face of immigration and stronger demand and in affordability in the resale market, that we can find a way to open up more supply in the rental market. But I just don't think it's going to be enough or even close to it. So, everything other than supply really is a Band-Aid solution. And I think it's really something to be thinking about if you are a renter, a potential investor, or you're thinking about buying into the market right now. Prices, especially rental rates, they are very high, but they're going to continue to trend up irrespective of government policy or interventions. So that's really it for today. I really just wanted to share this report because it is pretty interesting by Urbanation, something to think about whether you are a renter, whether you own property in Toronto or considering owning, or an investor or a landlord. It's all really interesting stuff. So my name is Ralph Fox. Once again, thank you so much for watching this episode on our playlist. And if you like the information that we've gone through today and you like to keep abreast of the Toronto real estate market, please be sure to smash that subscribe button below. I'll never get tired of saying that. And any comments or feedbacks are very much welcome.